But we begin with this Fox Business that financial stocks may be up, but he is still avoiding the bigger banks. Tyler Vernon, CEO and CIO at Biltmore Capital Advisors, here now on set for the hour. XLF up more than 21% in 3 months. We've seen this big resurgence in these earnings and these names, and you still don't like them, Tyler. What's going on?
Well, some of the smaller names are very interesting. Some of the issues with the larger name is just that there's not a whole lot of visibility into what's going on in these balance sheets. We like companies, look at a REIT. I mean, you know the property that they own, you know the vacancy rate, you know the cash flow. It's straightforward. With a lot of these larger banks, there's still a lot of off-balance sheet transactions. There's risk that we really don't even know. Let's see, the CEOs in 2008, they didn't even know what they had on the books when the meltdown occurred. So, you know, we like companies that we can understand, where we know the types of risks they have. And with what we're seeing going on in Europe, you know, we're concerned.
Well, I mean, look, the market has actually been performing rather nicely so far this year. Fresh highs hit for the S&P 500, numbers we haven't seen in years. Yeah. But at the same time, you're telling your clients to be cautious because we're not paying enough attention to the data that we're getting from overseas. So it's the global picture that you're nervous about.
We like markets in the short term. We think markets have had a bulk of the run-up for the year. We think
this is it?
Well,
it's only February 28th.
We think we have a little bit more yet to go. I mean, things are getting better. Economic numbers are getting better. We're seeing investors just feel better. Let's face it, if we were moving ships into the Middle East, which looks like we're doing a year ago, we would have seen a market meltdown by 300-400 points if we saw earnings slowdowns. Investors are getting more confident. They're spending more. The numbers that we saw today, investor sentiment is better. And this is driving multiples higher. So I think we will get continued multiples, but we need to start looking at some point over the next couple of months about earnings, and things are slowing down. Margins are going to start to contract. And let's face it, this market, the Fed has been so accommodative, and that's really led to this increase that we've seen. So, you know, can the market survive without the Fed and with it pulling back?
Okay,
That's
Tyler, I've got some breaking news I need to get to. I need to just stand by for just a moment. We're getting some breaking news. It is time for the good, the bad, and the ugly. Joining me now, I got Phil Flynn in the Chicago trading pits. Tyler Vernon back on set with me. Adam Shapiro standing by in the newsroom for me. And Phil, to you, it's time to avoid the utilities sector.
Well, Phil talked about the risk on trade taking place, and utilities are typically a very defensive area. And what we're seeing are portfolio managers making that shift from defensive, trying to catch up with markets. And as a result, they're going to more high-growth areas. Additionally, utilities are facing a secular problem, and that's this transfer from coal-powered to nuclear and gas-powered type of generating systems. And that's going to be a huge expense for the industry going forward. Combining that with a very regulated industry, I think it's going to be some problems as they look forward.
You think that we're going to see some shutdowns potentially over the next few months because of the regulatory issues and the EPA that's involved with the sector?
Well, there's just a lot going on. It's anytime you're dealing with government intervention and regulation, it's a pain. And when you have such other great growth areas of markets at this point where portfolio managers are really shifting their interest, that's where I'd want to be.
Okay, well, the group's up over 9% last year, so he's saying sell now. All right, Adam, you've got our ugly today. More bad. Actually, it just popped up on your screen, everybody, up 2 cents, but the stock has been down all morning, down in London train, Tyler. Look, you've also got Royal Caribbean. This is prime booking time, Tyler, for the sector, the industry overall. From an investment perspective, is it time to stay away from this group?
I'd stay away. I mean, in general, the stock, I've learned not to catch a falling knife in the past. And when you look at these disasters, you don't want to cut your fingers off. So you don't want to touch that stock at this point. I think investors, some are looking at a buying opportunity. There's a lot of litigation that could come out of both of these events, especially the previous one. So I would stay away from it. And when you look at the bookings alone, they look like they're down about 8 to 10% over last year. Right. So again, it's just not a sexy place to be at this point.
And you know, I back in Tyler Vernon into the conversation. You actually, when you were on the show 3 months ago, Apple was one of your picks. You told our viewers to buy it. In the last 3 months, this stock has jumped substantially, about 39%. Yeah. Are you staying with Apple now?
Yeah, we're staying with Apple. I mean, even though the stock is where it is, it's arguably still one of the cheapest growth stocks that are out there. I mean, they're doing amazing things. Rumor has it that not only are they bringing out the 3, but they have the 4 and the 5 and the 6 already in the pipeline that Steve Jobs sort of envisioned before he left. So Jobs has done a great job with the transition. They're operating on all cylinders as far as growth. They haven't really hit the emerging markets yet as far as bringing on more carriers to sell their phones and other products. And when my father's in the Bahamas right now at 77 years old with his iPad, I mean, again, it's being used across multiple generations.
Well, what was your thoughts about Tim Cook? I mean, since Steve Jobs died, I mean, Tim Cook, there's a lot of responsibility. We just kind of had the first sense of him. Shibani covered that. What is your sense of Tim Cook and how he's leading the company now? Are investors concerned at all?
Well, no, it doesn't seem to be. I mean, it seems like it's the same old company, that it's really that he's left this legacy of innovation, and that Cook's done a great job with the transition. So, the stock price will show you that they're not that concerned. The numbers are showing you that it really isn't affecting the growth of the company. And there's a lot of talk now about them potentially starting to issue a dividend, which could bring this stock into a whole nother area, as a lot more investors that are dividend investors, are buying the stock, and more institutional investors that might need a dividend, or a mutual fund portfolio manager that needs a dividend in order to buy would buy it. So there's a lot of reasons why this stock could easily move up and pass 600 by the end of the year.
You know what, Shibani? That's the fascinating. I mean, you're bringing up an excellent point with the dividend.
Yeah. Well, and that's one of the reasons why the whole technology sector, I think, is a lot more of more interest, and that's been helping to drive this market. Is there's nowhere to go for income. I mean, with a 10-year at 2%, investors are trying to find that in stocks. You can't get it anywhere else. So we're very positive that a dividend would be announced, or some kind of stock buyback, probably a combination of both. So I think when we get those, again, those are both great catalysts for the stock to move.
Well, Tyler Vernon, it's great to have you on the set. And again, you picked Apple 3 months ago, 39% higher since you picked it. Kudos to you. And of course, Shibani Joshi standing by.